Hey guys, how you doing? So today I want to talk about Valeant Pharmaceuticals. They're traded on the TSX as well as the New York Stock Exchange. Um, I think this is a stock that eventually is going to be a good buy. Right now, it's I'm not looking to get into it yet. I considered it when it actually hit its bottom of the 52-week low at 92, and I was gonna buy. I was like, okay, this thing is it's gonna pop back up. So, and it did. So I'm just gonna wait it out, but not buy it yet. It rallied a little bit today. It's currently at 120. Looking to enter this thing. I think it's gonna come back down. It's getting short squeezed right now, and Bill Ackman keeps putting a lot of money into this, which is kind of beyond me. I mean, if you look at the chart of it, let's quickly look at this. Check out the daily chart. Yeah, the daily chart, the RSI is at just over 40. The weekly is still showing a strong sell signal. Actually, the sell signal just crossed on the monthly, so I think this thing's going to keep going down for a little while. And again, I'd consider entering it at around 8,200 bucks a share. I think that would be a good buy. Like its PE ratio is just under 60, so that's all right. $39 billion market cap, so this thing's pretty big, which is always, I think, a good thing. However, it worries me a little bit with accusations of inflating revenue. I think the market overreacted a little bit to it, so that's why I think if you got into this right now, it wouldn't be a bad play either. I'm still a little bit. I still think this thing's going to go down a little bit more. I don't want to keep repeating myself, so, but I'm going to look at some. Let's look at some ratios on it. I believe it's a fairly heavy leveraged company. Let's see here. Insider ownership just under 2%. Beta says 0. Okay. Yeah, their debt equity ratio is at 396%. This is a little worrying. I, I like companies that have lower debt to equity ratios because they're being run in the best interest of the shareholders and not the creditors. So this is why I personally look for a debt equity ratio of 100 to 150 or lower. But as we know, debt is cheaper. Their ROI is pretty good at 20%. But honestly, guys, like their other ratios are not that impressive. Like they're mediocre. Uh, their historical growth grade is an A, which is nice. Yeah, so this thing is, I would advise letting it come down a little bit. But if you're playing this thing super long, buy it now. Nothing that really, again, but it's just the whole reputation thing is they're definitely affected. But they're such a large company that I think that information is already embedded in the current market price of 120, but we'll see how it goes. Let me know what company you want to hear me discuss a little bit about. See you later, guys.